What's up, everybody? It's Why It's Dividends here. This is my first real YouTube video, and this is kind of just a bookmark for me to look back and see where I came from, how I started off, how it's going, maybe what I knew, what I didn't know. This is really just kind of my personal log. S&P green today, portfolio green today. Love to see it up 0.2%. That's not bad. I'm gonna start this video off by just going over all of my, covering all the bases. So let's start out with my positions. This is my first position, Vanguard 500 Index Fund ETF. We're sitting at about $556, and this is my largest holding in my entire portfolio. I had about 1.006 shares of this one, and it's done pretty good from my portfolio so far. If we go back, we can see if we switch over to year to date. No, right here, all time. We can see I'm up a solid 9% in about 8 months, which translates to $46. I'm very happy with this buy, with this purchase. This was kind of the first one that I knew I wanted to get because the S&P has recovered from every major crash in history so far. It's as stated earlier, February of 25, which means Trump has been elected recently, and I'm hoping this pushes up very, very heavy over the next couple years. Jumping into the second one is Realty Income Corporation. This position did very, very well. Way back in October, it was up about 11% overall. And I was up 70 bucks in my position. She's came down a little bit. I'm still in the green, but we're only down to $9 or up 2.3%. This stock is just a big dividend producer, right? If we go over here, it's a 5.775% yield, which is very, very large. But I like big yields. Now, looking at Coca-Cola, this is another dividend producer, dividend giant, dividend king, whatever you want to say. And Max, it looks very, very good. Of course, this is way back from, where are we looking at? January of 06. So this stock's been around longer than I've been born, and I'm sitting right here with money in it. Isn't that something? Coca-Cola's been on a really nice run. We can kind of see a trend line kind of going up here. It looks like it's about to touch again. I might have to start watching this on the daily. The dividend yield is pretty good at a 3.064, and it pays out quarterly. Annual payout is $1.94, so it's not a whole lot of money, but it's a good amount of money. The next position is Texas Roadhouse. I have about two shares of Texas Roadhouse, and she's sitting about $178 right now. In the dividends, we have 1.36% yield, which isn't good, but I want to say that Texas Roadhouse has been increasing dividends for around 60 years. So obviously, dividend growth of 3 years is at 27%, which is pretty big. It pays out $2.44 annually, and it pays out quarterly. In my portfolio, we can see I'm up $20 on this position, and I own 2.014 shares. Sorry, I bought in at $169.16 a share, and it's at $178.38, and I'm up about 6%. This next position is Johnson & Johnson. Looking at the year to date, we're up pretty good. Looking at the 1 year, different story. Very, very big ups and downs. It ebbs and flows, but that's the name of the game. We look over the portfolio tab. I'm up 5% on this position, and I have 2.032 shares, and this is just due to the dividend reinvestment that I have going on. Dividend yield is 3.202%, and the dividend growth over 3 years is 5.428%, which isn't too bad. It is another stock that pays out quarterly, but it pays out $5 a year. This next stock is Target, and Target is closed at $134.50 per share. If you notice the trend, I'm a real big dividend investor. I love dividends. I do have one stock that's not a dividend producing stock, but I'll tell you why here in a little bit. Dividend growth over 3 years, 12%, and a yield of 3.3. It pays out just around $4.50 per year, and it pays out quarterly. Again, pretty normal stats. If we look at my portfolio, it's not doing too well. I'm down about 10% overall and down $26. If you could believe it, I was down right around $70 a couple months ago because I believe Target missed earnings and dropped 20-ish% in a day, I want to say. And I lost a lot of money, and that wasn't fun. If we look at the next stock, it is the high and the mighty Nvidia. Nvidia price is right around 128.40, and it's up $4.43 and or 4%, just about 4% on the day. If we look at the year to date, it's not doing too hot in 2025. It was deeply, deeply discounted right here, which is obviously why I bought in. If we look at the 1 year, doing pretty good, and the max, obviously, it's Nvidia. It's pumped very heavy. If we look at the 1 day, it was a very good day, very good day. I liked watching this go through. This is the one stock in my portfolio that does not pay out dividends, at least with any sort of high yield, and that's just because it's a growth stock. It was deeply discounted right here. It was deeply discounted right here, and I missed out on buying it way back when on July 9th, when it was at 134, and right around the peak it was at 149. So I sold because I realized I was just too invested in it. I was checking it all day, every day, and it was just getting to me. So I sold out of the position for the better. I sold for maybe 30 cents more than I bought it for. Not a whole lot of gain, but yeah, with that huge drop as that DeepSeek news came out, I bought into this, and I'm very bullish on Nvidia. I believe that in the future, if the government ever adopts AI or any of the sort, we go over here to Nvidia. I believe that Nvidia will be a huge name. I would not be surprised if we saw government contracts from Nvidia for AI. As we look at the chart, I just kind of got some good key support and resistance levels as we zoom out to the 1 day chart, I believe, or we're looking at 1 day candles. Sorry, she's on a nice little recovery right here. This was when the DeepSeek news came out. We went from the peak was 149 stock price all the way down to 116. So it was a big drop. It was like 20%. Lost $600 billion in market cap, almost $1 trillion market cap. And I figured I'd ape into it and kind of wait for it to recover. I'd really like to see Nvidia around the low 200s in the next coming months. I believe this run can only continue. And if they don't split stocks, I think a fair valuation is around $325. This may be incredibly ambitious. I may look back and think I'm an idiot. But that's where I think she can go. And again, if AI becomes big enough that the government is handing out contracts, I believe Nvidia will be the first company, if not one of the first companies, to get those contracts. And that will obviously be a huge bump in increase if they're getting government funding. So that's the reason why I'm in Nvidia, and it's not a dividend producing stock by any means. The portfolio, I'm up 5.28, $12. My portfolio is only valued at about $3,000. I believe I just crossed that mark. $3,034.48. And I'm kind of just looking at this one in the short term. But if she does end up recovering from this little dip and kind of push up to new all-time highs, I think it's about time for another bull run, and I'm looking to hold this for the next 5 years, I think, at least until she hits 200 and, maybe 325. Time will tell. There's obviously no way to predict that. Nobody really predicted this bull run. Nobody predicted that news. So things in the market happen that aren't in our control, and that's what we as investors need to realize, is that things can be out of our control. Um, but this is one stock that I'm incredibly bullish on. I have very strong feelings about. I'm very confident in this Nvidia stock. Obviously, I mean, I have a Nvidia GeForce RTX 2060 sitting in my computer right now, which isn't the greatest by any means, but they just dropped the 5090s, and earnings is coming up in exactly 20 days, and I have a strong feeling that with these new GPUs, the stock is going to pump very heavy with that news of beating earnings. So that's where I stand on Nvidia. This next stock is Coney, Yield Max Coin Option Income Strategy ETF. So this is just an ETF that tracks the usage of this option income strategy. I'm not going to get into the really nitty gritty of that, but for those of you who aren't familiar with yield max ETFs, it's exactly what it says. It's kind of a max yield. So if we go over to the dividends tab, the yield is 140%, which is insane. The annual payout is $20, and the share price is at 13. Excuse me. I have just about $100 in this stock, and this is giving me a lot of dividends. I've already received over $20 in dividends just this year, on not that big of an account size. It's not doing too hot. I'm down $6 or 5% on the stock in my portfolio with 8.392 shares. So I've already gained a third of a share. Next year, we'll look at my dividend projected income later, but it's very high in all thanks to this stock. This next stock is Nintendo ADR. This technically isn't the Nintendo stock, because it's not publicly traded on the NASDAQ. So this goes through some other sort of BS kind of exchange, and I'm not going to cover that nitty gritty. This is not a dividend producing stock. In fact, it's down 16.8%, or not mainly a dividend producing stock. I'm in this one. I actually bought this today. I bought 6 of them on the second. No, on the 6th of the second month. Not 4.482. This stock has done terribly in its entire lifetime. Way back when it was up like at $90 at one point. But this is just another stock that I'm very bullish on, that I feel very positive about. The Nintendo Switch 2, the trailer released, I want to say 2 or 3 weeks ago. And I believe that this stock will pump very heavy around the launch of the Nintendo Switch 2, especially if we get some big mainstream games like the new Elden Ring game, a new Smash game, new Mario Kart game, new Zelda game. I believe there's very many reasons for this stock to be bullish, and I'm probably going to hold this stock all the way until the next earnings report, because I believe the Nintendo Switch 2 will do better than projected. I believe it's going to sell more than the original Nintendo Switch. It will actually be an impressive console this time. It will be on par with the new generations, possibly a chance for 4K 30 FPS. If we're very, very, very lucky, 4K 60 FPS in the docked mode. I'm hoping for like a 1080p OLED screen, that looks better than it does now, because it's a subpar screen. So are the internals, but I believe both of those will be upgraded with this new Nintendo Switch, the Nintendo Switch 2, which is why I'm bullish on this stock in the long run. All right, this next stock is Consolidated Edison. Now, I'm going to be real. I do not know. I don't remember why I'm in this company or what what they do, which isn't good. Considering, looking over here, it's got negative 1.51 billion free cash flow. In the portfolio, though, I'm up 5%, $4. Not terrible for a $100 investment. It is a very good dividend yield at 3.475 and growth of 2.312. Annual payout is 3.32 and it pays out quarterly. So again, the basic stuff. Um, that's really all I have to say about this stock. It's performed decently in my portfolio, but if we look over the month, it's done good. Year, 1 week, it's a good stock, I believe. Um, and I think it's a dividend king. That's the only reason that I can remember investing in this one. And yeah, that's all I have to say about this. This next stock is a big one for all dividend investors. This is Charles Schwab U.S. Dividend Equity ETF. So this is an ETF that tracks dividends. It's that simple. If we look at the yield, it's a 3.58. I like to keep my yield above 2.5. I think I'm doing good at keeping it above 3%. Dividend growth of 9.873 and annual pay at a $1, which doesn't look like a lot, but then you realize it's $28 stock, and it's pretty good for $28 stock. And my portfolio, again, just a really small 3.74% increase, but sorry, $3.74 increase. However, it is a almost 5% increase. It's done decent for me so far. As we kind of look at these, it did terrible in December. So did everything. December pretty much wiped out my entire portfolio. I was real close to being in the negatives, but by the grace of everything holy, I stayed in the green through it. And I'm very happy. This ETF is a big one with dividend investors, obviously, because it tracks dividends. But everybody that I watch and I've spoken to is very bullish on this stock. In fact, there are several people that I know that only invest in Schwab, or a large percent, or around 60 to 80%, is all Charles Schwab U.S. Dividend Equity ETF. A lot of people are bullish on this, and I am too. I mean, it's up 235% in its whole lifetime, which is from what is this? Just January of October of 2011. We look at the 1 year, it's up 10%. Year to date, 2.53, which is only about 2 months, 2.31. Kind of basic stuff. But yeah, I like this stock. Everybody else is so passionate about it that it's kind of made me passionate about it. And of course, a 10% dividend growth over 3 years and 3.558% yield is also a very attractive number. This next stock we're going to look at is Vici Properties. Now, Vici Properties is a property chain, I guess is the simplest way to put it. They own several hotels and casinos in the Vegas area, and own multiple hotels across America, hotel chains. They are a very good dividend producer at 5.606 and a 7.509 dividend growth over 3 years, which are, yet again, two incredibly attractive numbers to someone like me. $1.7 on the annual payout on a $30 stock is very good. Price gain in my portfolio is only $1.227, 2.7%, but can't complain because I'm in the green. I bought this, I believe this is January 6th, or would this be, yeah, January 6th. It's backwards for me. But I bought two shares, and overall I like the stock. It's performed decently for me. And again, everybody else in the stock is very bullish on it. And I think, especially with in Texas, well, actually, earlier today, Governor Greg Abbott came out and said that he is not bullish, that's a stock term, positive, and he backs sports gambling in Texas. And if you don't know, there's the new owners of the Dallas Mavericks also own a huge gambling casino, huge casino. And they want to bring that to Texas. It's kind of an untapped gambling market, and everybody that I know goes up once a year to Choctaw and goes and gambles a little bit. So there will be a huge market if it gets passed. However, the current bill will not pass this session, and I believe we have to wait another 4 years. But whenever that happens, I believe this stock will pump pretty heavy. I don't know about 50s, but there's a good chance that it pumps up pretty hard uh, due to that news. Because if they can be the first people to kind of start renting out, start building casinos here, then that's a whole lot of people that are going to be going to these casinos. Um, yeah, I have 2 shares, up $1.02 overall. Not too shabby. All right, next is the old faithful but boring U.S. dollar. I had about $140 earlier today, and then I bought some Nintendo stock at 107. Um, so now I have a pretty small cash position, but I could throw in a little bit to Nvidia if there's another big discount, or I mean that's enough to buy whole shares of some of these companies if they get discounted pretty heavy. J.P. Morgan. Now J.P. Morgan is a stock that I was in uh, for a while. If I can, yeah, portfolio. Um, Scroll down to here. I bought it in July. This was one of my first things to buy. Um, I bought it $207 and sold it $266. I was up just about 30 or 40% on this position, and I sold out of it. What is this? February 6th. Um, because I had been up around $70 on multiple positions, and they all came bleeding back down in that kind of December, November, October crash. And I was very annoyed, and I told myself I'm not gonna lose free profits again, and I didn't. I lost, or sorry, I didn't lose. I sold out of my position, and I just kind of left a little. If we can see here, yeah, $2 in there, just to kind of keep that position there. I guess I just sold 2 entire uh, shares and left that 0.01 just to kind of see where it would have gone. Um, it's still up pretty big, which is kind of annoying because I sold out of it and then it pushed up another percent or two. But it's the name of the game. I'd rather lock in profits than not take profits at all. J.P. Morgan is just a company that I like. The yield isn't very good, and the dividend growth is actually really good. Annual payout of $5, but in a $276 stock, that's not a really impressive number. If we go back to the portfolio tab, I received, $1.25 dividend, $1.25 dividend. So yeah, I sold out of that, and if it comes down again, if I get a little discount on it, I'll buy in again. Um, Now I don't know when that will happen because it's on a nice big uptrend. Um, and of course, naturally, I sold out of it because I didn't want to lose all those gains. But if it comes back down to anything below 240, I'll buy in again. Um, I like that stock around that price. 230s is even better. I mean, obviously, the cheaper the better. But I really like that stock around the 240s. So J.P. Morgan was the last stock that I hold. So let's go into the dividends. In total, I've received $56.08 in dividends. And obviously, it's February. So last year, I received $45.78 in dividends. I was investing for just about 6 months. And I think that's pretty good. Next year, or technically this year, I'm projected to receive $222 in dividends. 124 of that being that Coney, CONY, Yield Max ETF that I spoke on earlier, that I really like. Naturally, any stock that pays you more than you put in is incredible, which I think is why I like it so much. But yeah, right here shows $63.41 in dividends, which I don't know why it's different from here. I'll have to look into that. But price gain overall, we can see $78 and realized gain $44, which is 10%, which is from the J.P. Morgan shares that I sold out of. Total return is $186, which is factoring the price gain, dividends, and realized gain in. And that's all off of $2,954.76 of invested capital. I like to think that I'm doing pretty good for myself. If we go back over here to the max, it was up very, very big. It was up 10%, $277 in the middle of October. If we come down here, I'm only uh, I'm up $90 due to all of these. Or sorry, this number is only $90 more than my total return thanks to all my dividends. And I'd like to have this was pretty much all appreciation at this point. I'd like to kind of get back up to that one day, but as we look right here, it's not looking too hot. I don't know why that shows a $50 drop because it wasn't. Um, that's a false number, I believe. But yeah, I hope to reach up. Well, obviously, I hope to reach up more because that's kind of the goal with investing. But if we look at the all-time, I'm doing really good with Vanguard 500. This is a stock that I don't think I'm ever going to sell out of. I'm 17 right now, and I'm looking to reach financial independence by 45 or 50. And that leaves a ton of time for this to compound, and I'm going to keep dollar cost averaging into this, especially with Trump as president. I believe it'll jump more. Now, over the next month or so, if Nvidia doesn't jump ridiculously hard, if it doesn't kind of gap up, then I'll probably keep dollar cost averaging into that too. Next to that, I'm going to start dollar cost averaging into Consolidated Edison, Charles Schwab, as well as Coney. Yeah, right here, Yield Max ETF, just for the big dividends that I see. I mean, $124 in dividends. That's ridiculous for one stock, considering something like, let's see, Vanguard 500. I'm gonna get $6 from them, and I have $500 invested. I'm gonna get 20 times that, and I have 1/5 of the capital in this company. That's why I like the stock so much, even though I kind of have a bad return on it. Down 5% isn't a whole lot, and all of the money that I put into this, even if this stock bleeds to zero, I won't be terribly annoyed. I'll know it's kind of a good risk versus reward, especially if this doesn't go down any more than 20%, and I'm still making $124, then I'm more than happy with that. If we look here, this is just kind of all the payments that I got in 2024 and all of the forecasted ones in 2025. I've got 4 payments in 2025 so far. We've had $1.25 from JP Morgan right before I sold out, $1.365 from mRNA. That's another company that I was in for 36 seconds, I believe. And then it went down like 20% in a day, and I was just done with it. Never wanted to look at it again. Got $6 in dividends from Yield Max from Coney, and $1.8148 from Realty Income. I don't know what this means. I believe this is just the dividend growth rather than actual stock appreciation. But overall, up 385% in dividends from this year. I like that number. I'm very happy with where this portfolio is sitting at. I'm not gonna open a ton of other positions unless, of course, I want to open a Tesla position because I'm just about as bullish on Tesla as I am on Nvidia, which I spoke on earlier in this episode, in this video. And I'm a strong believer that those two stocks will create generational wealth. All right. Well, that's the end of the video, everybody. Please follow my Twitter at YBs. I kind of post every once in a while. As seen last night, I posted Lilly's earnings are going to report before market open, and I said I really liked Lilly's around the mid 860s if she beats projections. Naturally, beat projections and ended up at 868.92. So, follow me if you want some incredible call outs like this. Maybe we shouldn't talk about that. But yeah, I repost everything I see pretty much. So thank y'all for coming to my TED Talk, and I'll see y'all in the next one.